Internet of Finance. This is how Lamine Brahimi is setting the core activity of Taurus Group as its founding partner. Taurus is currently building a very sophisticated infrastructure on blockchain. It aims to connect many financial institutions on its value line, and also to help companies raise capital through the digitalized assets. Will this eventually replace the current IPO process? You're also saying that outside of building, of course, the infrastructure for banking system on blockchain, you also want to help companies to raise capital through digitalized assets. How exactly you want to make it?
So when we started 3 years ago, liquidity and volumes were in cryptocurrencies. So the banks that were approaching us needed to kind of solve a problem in order to give secure access to cryptocurrencies such as Bitcoin, etc. But we come from a regulated background. Some of the co-founders, worked in banks, in asset management firms. One of them is also an ex-FINMA person. So we always had in mind that the next wave will be driven by real securities. And we have developed and made our tech evolve, gradually. And now it's true we have part of our technology that helps either banks or companies themselves issue in 3 clicks tokenized assets, whatever the type of assets they want. It can be equity, it can be debt. For banks, it can be structured products. It's quite powerful.
The digitalized assets of those companies will be based on a certain cryptocurrency. What would be the currency that you think will be used?
So you need just to differentiate where they are booked. So the new law that has entered into force on the 1st of February, partially, the second part will enter into force in August, created a new type of securities, which is called, sorry for the barbarian name, registered uncertificated security. And this law has also recognized distributed ledgers. In other words, if I simplify, blockchains as valid registers where to store the securities. So basically, to answer the question, people can tokenize securities and use the Ethereum blockchain, they can use the Tezos blockchain, they can use any blockchain they want that allows them to create tokenized assets.
From the players who have now come in and docking into the blockchain, who you think would be the ideal company to raise capital on the blockchain?
We have very strong view, and if I simplify to the maximum, you have, I would say, 2 main categories of securities and companies. The listed capital markets, so companies listed in stock exchanges, and the private markets, so basically companies which are not listed. If I give you a little bit of a couple of numbers, I think in Europe you have 27 million companies in general. I think less than 10,000 are listed. And in Switzerland you have roughly 550,000 companies and 230 roughly are listed. So the companies for us that basically you need to solve a problem in order to have a viable business model. We are not aiming at all into the listed capital markets. People complain, but they work pretty well. We really see opportunities in the non-listed capital markets. So basically companies that are sufficiently large to attract investors, but also that are dynamic, but not big enough or not willing to go into the IPO route.
That are not ready yet.
That are not ready or just don't want to get listed because listing provides quite some advantages, but there are also costs and constraints that go with them.
So that's the question now is, what would be the exact advantage for those companies to go and raise money on the blockchain compared to the regular IPO?
I would say there is the blockchain, it's quite high, but to us it's really digitizing the process. And it happens to be on distributed ledger technologies. The main advantage is really to be the transferability of the shares. So the law in Switzerland allows that. So today, if you want to buy a share of Taurus, you need to sign a share purchase agreement on paper. for both the sellers, for both the buyer, possibly go back to the board, have it approved. It's a process that can take weeks. Now, with the new law and with the technology that allows for it, it's something that is instantaneous. So that's quite interesting. And when you bring, transferability, buying, selling, you can think of a new way, kind of a capital markets 2.0 for those companies to raise capital, but also to allow their existing shareholders to buy and sell their shares very easily. Some people say, we unlock or deblock liquidity for those people.
Yeah, because liquidity is a very big question, and for many players saying that maybe it's not that liquid for me to come, and when can I exit?
Yeah.
Is there ways for the players to be agile?
Yeah. So it's a very fair question. By essence, those companies are smaller, so by essence they are less liquid. So there are mechanisms to solve this. So we don't think that central limit order books that you can see on any stock exchange make sense. You can maybe look at liquidity event where companies say once a month or once a quarter or twice a year, we offer kind of liquidity windows where people can get in and out if they want to. So I think this might work. But in the end, to be honest, it's something completely new. The market will decide. I think what's very important is the process should be very simple. It should be also relatively
transparent
and cheap for the people, to get, to enter the space. From what we see, the companies calling us, there is quite some interest.
Yeah, and once this market develops, really become digitalized, all the marketplaces, how long it will take? And will this raising capital on the blockchain will eventually replace the IPO process we know today?
Yeah. So how long it will take, to be honest, it's $1 million question. We don't know, but really, we really believe it solves the problem for those companies for the questions for the reasons we mentioned before. And you can compare it to e-commerce, right? It should be as easy to buy and sell, private company shares as it is to buy a book on Amazon. So it's going to take time. It depends on, the trust, and the trust relies on regulation is there, the technology is there. Now banks and good issuers need to meet. And basically, to answer the second part of your question, will it replace IPOs? No, I think it's going to be complementary to the IPO process, and maybe even a stepping stone for companies that make 10, 20, 50 million revenues, then they grow. They are used to accessing capital markets, and maybe when they satisfy the requirements to go into any stock exchange, they will have acquired the experience, and then it's easier for them to go there.
Like a stepping stone to
exactly.
To go into
So,
IPO.
In my opinion, and it's not at all a politically correct answer, it's really complementary to the IPO process.